Tom Higgins, CEO of GoldEye. Thanks for dropping in. What's the most talked about subject in the liquidity world now?
Well, I think in our space, it's definitely how crypto liquidity and FX liquidity are sort of coming together. So when you've got a traditional retail FX broker and they want to access crypto liquidity, how do they make that happen? Because it's different liquidity providers, it's different ways of accessing it. The technology is similar, but you need to have all sorts of different angles on it. So how do you do that? How do you make that happen?
What are the different angles?
Well, if you, in FX liquidity, if a market maker is saying, okay, or a liquidity provider is saying, I have got, I don't know, 10 million cable available at the best price, you're probably going to get 10 million. In the crypto space, if they're saying they've got 10 Bitcoin available, they probably haven't, because what they're doing is they're camping at the top of the book. So they are sitting there and they can often hog the order book at the top of the book. And so when you execute against them, they might slip you or you might not get all the volume that you want to do. So we have to have clever logic in there to automatically retry. So we have algorithms. When you submit your order, you say the algorithm you want to use, and you say how you want that to be filled. So it's much more of an EMS rather than just a liquidity management now. So you say, okay, I want to try 20 times to get that volume, and I don't mind the fact it's going to take a bit longer because I want my priorities to get the volume, or I want to try a certain number of times, or I don't want to disclose my full volume, because if I'm buying 200 Bitcoin, for example, I don't want to disclose to the world I'm buying 200 Bitcoin. So I might then do an iceberg type order where I only put out maybe 1 Bitcoin at a time, and I try again and I try again and I try again to get my volume over a period of time. So there's different ways that you need to execute the different sort of liquidity. Also, the coins vary dramatically from very big coins like Bitcoin and ETH, where there's vast amounts of liquidity, to the altcoins when you go right down the list of altcoins, so there's very little. So you have to be able to get the right sources of liquidity for some of these new altcoins if you want to trade them. They're like penny stocks, so some of them you can do really, really well on, or lose on them, obviously, but they are much, much more volatile if you like volatility. So,
are there any AI applications you can talk about that help this to facilitate this process?
It's interesting. I just did a panel this morning on AI, and the sort of general consensus is that ChatGPT is in a hype phase, and there's a lot of misuse of the term. But as far as a trader, how can you use AI? It was more about, certainly the panel's angle was, it's more about using news and being able to understand sentiment and news to guide where you're going to be trading, rather than generating straight buy and sell signals, which is, it's too complicated for AI, and you'll get too much incorrect information, because it's this, one of the problems with generative AI models is they will confidently give you the wrong answer. So they will just make stuff up because they can.
Sorry.
But AI, the interesting angle on AI is really, from our point of view, is the other side. So if all the traders have got wonderful bots using AI to tell them when to buy and sell, and you're a B-book broker or a hybrid broker and you haven't got anything to protect you against that, suddenly you could be losing an awful lot of money, because you need the ability to be able to use AI on your side to be able to analyze the trading patterns of these traders, to see when some news items are going to come in and be able to react and maybe widen your spreads, maybe reject orders or slip prices if they're hitting you too hard. So you need to be able to react to the trading AI. So it's almost like Skynet with Arnie, where you've got machines trading against machines. Interesting, actually. Very interesting.
How did the approval of the Bitcoin ETFs influence the liquidity markets?
So the ETF really changed everything, because it put a stamp of authority from the institutional side of the business into cryptos, into digital assets. So the two ways it affected that. First of all, it allowed the traditional players who don't have licenses or don't have regulation to play in Bitcoin to be to play in Bitcoin without actually playing in Bitcoin. So when they're buying a fund that's priced on Bitcoin, they're not actually buying crypto, so they don't need regulation. They're doing a normal, standard, traditional finance fund. But if they've got a fund that is priced against Bitcoin, somebody needs to hold all that Bitcoin to back it up. So there was an awful lot of buying of Bitcoin in these funds. So there's a lot of inflows buying Bitcoin, outflows from exchanges to the funds, inflows into the funds buying them, which meant there was a big price upward pressure because there was lack of supply now. That has continued. The prices have sort of settled a bit around the sort of 66,000 or whatever it is at the moment. I haven't looked today. But it builds a sort of confidence in the market that is not going away.
Interesting. I'm intrigued to hear your opinion about crypto ECNs.
About ECNs?
Yeah.
So there's lots of different ways of accessing that liquidity. So you can either have an exchange like a Binance or an OKX or something like that, or more of the modern ones like a Bullish, where they're using automated market making, which is a completely different model, but again, a way of accessing it. Or you can go to a market maker, or where they will make market to you, and it looks like a price stream where you can execute against. Or you can do some form of aggregation against these. And the ECNs are providing quite a nice way of doing anonymized aggregation. So nobody knows who either side is of the trade, which is good and bad. So, but the ECNs will be able to, and do provide, and we work with all of the main ECNs. So Crossover Markets, Route 28, CypherTalk, Enigma, GC Exchange, all of these guys, to provide a better, deeper feed. So I say there's downsides and upsides. The downside of an undisclosed feed is because the liquidity provider doesn't know who you are, they're generally going to have to provide a slightly wider spread because they've got risk that it's not certain with. With our technology, it's a disclosed model, so you know who the other side is. If you're using Hidden Road or LTP in Asia, then they won't be your counterparty, so you don't need to worry about credit risk against them. But because the market maker knows that you are buying and selling from them, they know who you are, and they know they can give a tighter price because they can assess you from a credit risk point of view much better. So everything has its place. Undisclosed ECNs, disclosed ECNs, aggregated feeds, direct feeds, they all have their place. And, we have clients using all of the above.
Great. Last question. What's next for Goldeye?
Well, I think
it's a general question.
Take it generally, I would say our core product is our MatrixNet technology, and everything is centered around that now. So that's the FX side of liquidity aggregation, where we really support the B-book brokers incredibly well, the hybrid brokers, because that's the model of most traders today. And then the big growth area for us is on the crypto side, where institutional crypto liquidity aggregation and providing that. So more and more of our clients are buying services where they use our MatrixNet technology to distribute liquidity rather than just consume liquidity. And we've taken some on the journey of, I want to consume liquidity to I now want to sell liquidity. Crypto operates in dog years, they say. So FX was fast. Crypto is 5 times as fast. So what you would see in FX take 5 years is taking a year here. So one of these clients of ours has gone from crypto liquidity consumer to provider in like a 4-month period. So these things just happen really quickly. That is developing really fast, putting more algorithms into our algorithm models in MatrixNet to be able to help to execute these, becoming much more part of the traditional finance system. My theory, and what I'm seeing pan out, is that if a fund wants to be able to trade cryptos, they don't want to have completely different technology on the front end that their traders are using. They want the same portfolio management system that they're using for their equities and their fixed income and their futures and their FX, if they can. And they just want to have another asset class in there, in which case it's hooking up an EMS like our MatrixNet, rather than a completely separate platform, which is where a lot of the market's going at the moment. So I see that as the way that we're going, is supporting API trading, WebSockets fix, and whatever protocols people need to fit into the existing TradFi technology stacks that exist, because they don't change.
Great, Tom. Thanks very much.
Well, thank you very much. It's been great, very interesting.
Enjoy the expo.
Thank you.